This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. crude futures climbed 12% on Friday due to disruptions to global oil supplies because of the expanding U.S.-Israeli war with Iran. Brent crude futures settled at $92.69 a barrel, up $7.28, or 8.52%. West Texas Intermediate crude finished at $90.90 a barrel, up $9.89, or 12.21%. For the second consecutive day, U.S. crude futures rose more than Brent futures as refiners worldwide scrambled to buy alternative crude to plug the gap left by disruption to Middle East supplies.
International Energy Agency Executive Director Fatih Birol said on Friday that looking to Russia for gas supplies will be economically and politically wrong, given the incoming global supply of liquefied natural gas. The current crisis in the Middle East has led to questions in some quarters about whether to go back to Russia or not, Birol told reporters following a meeting of European Commission President Ursula von der Leyen and the EU commissioners on global energy markets. The EU is under mounting pressure from industries and governments to step in to try to curb high energy prices. Von der Leyen has promised to draw up options for EU leaders to consider at a summit later this month.
Moving on to the top news in the energy sector.
The war with Iran could leave consumers and businesses worldwide facing weeks or months of higher fuel prices even if the week-old conflict ends quickly, as suppliers grapple with damaged facilities, disrupted logistics, and elevated risks to shipping. The outlook poses a wider global economic threat, as well as a political vulnerability for U.S. President Donald Trump leading into the midterm elections, with voters sensitive to energy bills and unfavorable to foreign entanglements. The market is shifting from pricing pure geopolitical risk to grappling with tangible operational disruption, as refinery shutdowns and export constraints begin to impair crude processing and regional supply flows, J.P. Morgan analysts said in a research note on Friday.
Venezuela this month resumed exports of a key crude grade that had not been shipped since late 2024, diluted crude oil, DCO, with U.S. Chevron sending a 500,000-barrel cargo to the U.S. Gulf Coast. A document from state energy company PDVSA seen on Friday showed. The grade, produced from a blend of extra-heavy crude from the OPEC countries' main oil region, the Orinoco Belt, and imported heavy naphtha, is popular among refiners in countries including the United States and India. If exports are sustained in the coming months, they could help drain millions of barrels of inventories. By the end of February, stocks of DCO were at 4.8 million barrels, the highest accumulation of a heavy grade in the Orinoco, according to the document. Next, we have the top news in metal market. Nickel makers in Indonesia reliant on the Middle East for 75% of the sulphur they use may have to cut production as Gulf shipping is increasingly disrupted by the conflict in the region, analysts said. Sulphur is used to make sulfuric acid, which is essential for leaching metals from ore in nickel refining and copper processing, with some copper producers in Africa potentially facing similar problems. The Middle East accounted for around 24% of global sulfur production at 83.87 million metric tons last year, according to the U.S. Geological Survey.
Gold rose on Friday after softer U.S. payrolls data kept hopes of a Federal Reserve rate cut alive, but remained on track for its first weekly decline in 5 weeks as a stronger dollar kept gains in check. Spot gold was up 1.4% at $5,149.14 per ounce as of 1:31 p.m. Eastern Time, 18:31 GMT, but was down 2.4% this week. U.S. gold futures for April delivery settled 1.6% higher at $5,158.70. An alarmingly weak payrolls report that saw heavy private sector job losses along with higher wages whispers stagflation. Let's see if this is enough to help gold recover from what has been a disappointing week, said Tai Wong, an independent metals trader.
We will now look at the top news in the agricultural sector.
Raw sugar futures on ice rose on Friday as the Middle East war pushed oil prices sharply higher, though gains were capped by worries the conflict is disrupting sugar shipments to the Gulf and thus harming demand. Arabica coffee hit a 3-week high, meanwhile, and cocoa surged. Sugar consultant Mike McDougall said some concerns over Gulf shipments might have eased temporarily after Dubai-based Al Khalid Sugar, operator of the world's largest port-based sugar refinery, said it was operating normally.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.